Now, started lower, ended higher. The Dow ended up 39.5 points higher, up almost 0.1%. The S&P pretty much flat here at 5709. NASDAQ, again, almost 0.1%. The Russell down 0.1%. And the VIX was down 1.87 to close at 18.90. If you're falling asleep at the wheel, you better wake up and pay attention because the dollar is breaking out this week. The dollar has a negative correlation with the market. The dollar has broken out, back-tested, long-term trend line, formed this bullish falling wedge, and now formed these divergences, and is now breaking out. It will probably pull back. It's come up to the 50 period. You got a possible inverse head and shoulders here that could form on the dollar, and we could see further consolidation. I still think S&P is going to go a little bit higher, but I think that, again, it could put in a peak very similar amount of time that we saw 2001 and 2007 when we got the first initial cuts out of the Fed. That would be, again, 2007. That would be going in to next week. We'll see what happens. I think that I have a major warning now going on with the dollar. The dollar is doing this, bouncing here. The 200-week moving average in the weekly time frame, show that to you in a second, breaking out of this bullish falling wedge, and these divergences are now playing out. Dollar's up 1.5% for the week already, bouncing off of horizontal support. We broke this trend line right here to back test this trend line right here. And again, we're bouncing off the 200-week moving average. If we drop below that, that would be a bullish sign. The market, and again, we know we have this negative correlation with the dollar and the S&P 500. It's not perfect, but is that negative correlation? And again, this is suggesting the dollar is bottoming. I've been talking about this back test for a long time. S&P was going to go make new highs. It has now done so, looking for the top to be followed by the reversal. The dollar, I think, is suggesting that's about to happen. When we saw the financial crisis, the peak in 2007, we saw the crisis on into 2008. The market collapsed, the dollar soared. See the same thing happen this time. Divergence now playing out on the weekly chart, bouncing out the 200-week moving average. I expect we're going to get back above the broken trend line and back above the 50-week moving average here. The green line back above the cloud. Going to happen in the coming weeks, and then on into the months, we're going to see a new uptrend develop. The bottom is likely complete, and again, we're probably going to see the top complete very soon. I'm using a rule of thumb based on the last two. We got the first rate cuts in 2001 and 2007 that ushered in the bear markets, using that as a guideline. If you think I'm using that as some kind of hocus pocus nonsense, you're going to be able to predict the day and the hour of the turn. And I mean, people sometimes just lose all common sense. Think that you're not listening to what I'm saying. It's a guideline, but we know there are warning signs, and here's one of them: the dollar. The same is true for Bitcoin. Bitcoin is going to have a very, very hard time being in a bull market in 2025 with the dollar bottoming out and soaring. Again, the dollar needs to collapse if the market's going to continue to try to rise, and Bitcoin's going to continue to try to rally, and then we have to somehow magically dodge a recession. It's highly probable the dollar is bottoming, which is bad for the market, bad for Bitcoin. We're not going to, the Fed rate cuts are not going to prevent a recession, as people keep telling us. Absolutely amazing. Yesterday, the VIX predicted that we would have an up day on the S&P. Well, we were up just under 1 point. We were pretty much flat, getting a candle of indecision. The VIX still above the 50. We were down on the VIX today, but we had that 23% gain. We ended up closing 15% higher above the 50. If we drop back below the 50, the S&P can rally. We hold above the 50. Again, volatility can return. Risk is we have started a reversal. My guess is that's not the case, but again, we start seeing more and more signals turn bearish, then maybe that is the case. My guess is it's not going to be. I think we're going to top. You got a good shot of it this week or next week. You're going to see a divergence develop on the awesome oscillator and the RSI first on the S&P 500. The likelihood we'll be watching what happens here with the VIX. please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. Take a moment to do that. I would really appreciate it. Follow the link below to take you to a secured site. You could donate any amount you want or make it a recurring donation. If you could take a moment to step up to the plate and help out, I would really be thankful. I don't have any sponsors, just a direct relationship with you. I want to watch the video all the way through. I'll be talking about very important sequence counts that are developing on the Dow and the S&P. We're moving into major resistance in the monthly time frame, which I've been talking about. Resistance on the S&P weekly chart. So watch the video all the way through. Now, we saw momentum shift here today on the S&P 500. I still think S&P is likely going to form a divergence on the awesome oscillator and on the RSI. If we see Israel's response, missile attack, rather than later, then again, we could still go lower before getting that divergence. I'm wrong about the divergence, then maybe it started reversal. But we did get momentum shifting here on the S&P 500 today, candle of indecision. If we continue lower, still got a shot at a divergence on the awesome oscillator and on the RSI. We try to find a bottom. We could see it turn right back up very quickly, almost immediately the next day or in the next day or two, maybe with the jobs report. And again, you could start seeing green bars here in the next couple of days and complete a divergence. And again, if it stays red, there's risk of going lower. And we got a candle of indecision. That could either be a short-term bottom or it could be a continuation pattern with the little doji spinning top candlestick that formed. This is what I think is likely going to be the case. Now, we could go a little bit lower and then go higher, or we could try to bottom out here. We're pretty much flat on the S&P 500 today. Possible this starts a reversal. Be wrong about the divergence. I just happen to believe NASDAQ's probably going to fill the gap. I have the guts to tell you exactly what I think. Could be wrong about that? Yes. Don't have to fill the gap. As we will. He will go up and hit the upper boundary of the channel line as NASDAQ fills the gap. So we're still in positive territory here. That's what I think is likely going to be the case. These weekly divergences, like on the awesome oscillator here, begin to play out on the MACD, these multiple point triple divergences. Again, they're all over the place on the S&P. What happens? Do we start a reversal immediately? Does tensions in the Middle East and Israel responding to Iran, if that happens immediately, does that rattle markets? We'll see what happens. A little bit more time. Get dragged out into maybe next week. How it unfolds, but these divergences are going to play out very soon. Maybe they're starting now. I told you, it could be sooner or later. That rule of thumb for the other first rate cuts that we've had in 2001 and 2007. I've talked about this at great length and detail. When these divergences start playing out, and I think we're going to see a peak either this week or next week, in all likelihood, S&P 500 this week. I think that these divergences start playing out, we're going to see a big, ugly sell-off, and it's going to catch a lot of people off guard. I think by the end of October, it's going to be pretty ugly. Sell-off into the election. They'll probably get some kind of post-election bounce, but I think that we're going to see a top develop. Again, weekly chart on NASDAQ. Again, I think the same thing. I think we're going to get that gap fill. It's directly overhead at 20,400. I think we'll overthrow it a little bit. We'll confirm a lower high, and then I think we'll see a confirmation of a lower high. We've already had divergences develop all over the place on NASDAQ back at the July high. I believe that that is the top, and again, I have not changed my mind about that. NASDAQ, again, same thing. We got the bearish reversal of conditions for momentum here. We're dropping below the 10-period moving average. Told you, again, I still think a divergence could develop here in the more recent price action, but I don't think we're going to exceed the peak over here on July 10th. But I do think we're going to go fill the gap at 20,400. See, do we have to go down a little bit more? Try to bottom here, quickly turn back up, something like over here or over here, where we quickly turn back up. Could see that. I think we could rally. I think we could rally with the jobs report. It's possible. So again, I am going to be looking for a divergence on the RSI and here on the awesome oscillator in the more recent price action. If we fill the gap, and I think that's likely. No immediate response. And again, these geopolitical issues. Sometimes short-term knee-jerk reactions. Other times, markets for a while. Other times, markets ignore them. About things that could impact the stock market. And again, if there's a delayed response by Israel, again, markets could still rally. Even or if we got it out of the way, the markets could bottom out with it for the short term. That's the way it happens with geopolitical issues. It could happen, could unfold in a couple different ways. Regardless, I still think we're going to go higher. Nevertheless, wanted to let you know, again, momentum is shifting here in the daily time frame. I tried to do it yesterday. It was unsuccessful. We did it today, and it was successful. We'll see if it remains that way. Could give us a bigger sell-off, or, again, consolidate or try to rally with the jobs report. Again, we could quickly turn back to bullish. We'll be watching. But momentum is shifting here to let you know. The risk is that we've topped and we're starting to turn. My guess is we're going to form divergences. Possibly see the same thing on the Dow daily chart here with the awesome oscillator. I think we've got a good shot of trying to rally with the jobs report come Friday, or maybe the rebound we're now attempting. Maybe we see that continue on into Thursday. Got the private payrolls today. Private payrolls came in better than expected, better than the 128,000, came in 143,000 higher than the previous reading of 103,000. I think we'll see a rally with the jobs report. There's been concern, rightly so. The labor market is weakening. Powell has expressed concerns about that, but then more recently, backwards to tell us how great the labor market is. The Psalm rule has been triggered with the unemployment rate, the 3-month moving average, that is signaling a coming recession. It's not going to be wrong. Powell and Janet Yellen and all the Fed officials out there let us know we're going to have a soft landing, and then all the experts on the financial channels and over social media, everybody telling us, no, we're going to have a soft landing. They say this at every top before the bear market. In 2000, they did it in 2007 and 8 and 2000, 2001 there. Oh, this time it's different. The internet, the dot-com stocks. The NASDAQ has the bursting of the tech bubble. This time no different, doing what they normally do. You got a good shot based on the divergences in the weekly time frame and the monthly time frame. I think are about to set up in the daily. I think you got a good shot this week, next week, that we put in a peak and start a reversal process. And that is a rule of thumb based on the last two topping processes that we had: the Fed rate cut, first cut, and again, and then a top in 2007 and a continuation of the crash in 2001. We're not hearing what I am saying. The market is going to go up. Don't think it goes higher. If not hearing that, you're not listening to what I'm saying. Hearing me say, hey, here's a rule of thumb. We could do it earlier. We can go a little bit longer. It is a guideline. What happened at the other market tops, the beginning of the other bear markets, rounding the first rate cut. If you're not hearing what I'm saying, I don't know what to tell you. People only hear what they want to hear. Now there's so much complacency. Likely going to witness peak and a reversal. My guess is you're probably going to see it over the next 2 weeks here, this week or on into next week. A little bit longer. We went 19 days, almost 4 weeks there in 2001. Said give or take, it's a rule of thumb. Divergences are going to complete on the RSI and on the oscillators. The non-farm payrolls will be Friday, 50,000. Previously 142,000. We'll see if this number gets revised down. Continue to get these bogus fake numbers. So again, we'll see what happens. Overdue for a revision up. I wouldn't be surprised just before the election if they try to go the other way. Absolutely incredible. They do. I mean, we're dealing with fake numbers. Employment rate is supposed to hold steady at 4.2%. Again, Psalm rule's already been triggered. The 3-month moving average of the unemployment rate telling us we're about to have a recession. The stock market will peak, begin to turn down and reverse and start to price that in and usher in a bear market. That is going to catch the majority of investors and traders by surprise, and they're all drinking the Kool-Aid. We're going to have a soft landing. Recession indicators like the uninverting of the yield curve and the Psalm rule being triggered and others warning that we're going to have a recession. These are reliable, accurate indicators that have been proven over and over again, but yet people believe propaganda, so-called experts on the financial channels rather than indicators that have proven over and over. And again, inverting of the yield curve, the propaganda behind that. Oh, it's a normalization of, this is great. Proves we're going to have a soft landing. And it's just absolutely incredible. So anyways, we'll be watching the non-farm payrolls as we go into the following week. And I told you it was these first 2 weeks that I was looking for a top and the start of a reversal for the divergences to begin to play out. We're going to get important things next week, and that is we're going to get the Fed minutes from the September meeting, 9th. 1 week from now, Thursday, we'll get the inflation data with the CPI data. A week from this Friday, we'll get the PPI wholesale inflation. That can rattle the markets as if we start seeing the inflation data start ticking back up. That very well could happen. The thing that could rattle markets is we have port workers strike, and again, this could cause concerns about inflation, and we're going to have impact global supply chains. It may not rattle markets immediately, but it could. Something we need to be paying attention to. Now, another issue is tensions in the Middle East. Again, a lot of times geopolitical issues, it's a knee-jerk reaction. It's short-lived, and there's no response at all. Sometimes the market shrugs it off. Other times, it's a short-term knee-jerk reaction. It lasts a little while. Sometimes this rattles markets. It has the ability to do that. The tensions in the Middle East right now because the risk of a regional war. Seeing oil begin to creep up. Yesterday, a little bit more today. Start seeing tensions really rise. When Israel responds, which they're saying they're going to, spike in oil could rattle markets as well. A lot of uncertainty. And again, sometimes geopolitical issues, markets, other times they don't. I think this one will likely rattle markets for how long, who knows. Never know with these geopolitical issues. Thing is that will Israel respond? How they respond could rattle markets even more. Oil facilities are, which is going to be a likely outcome of all this. Also, their nuclear sites. So again, paying attention to this, maybe again this rattles the market, then it stops. There are other things, and there are other catalysts. The port workers strike, risk of coming recession with the economic data, going to be moving into earnings, uncertainty surrounding the election. There's a lot of things that could volatility in the market. So we'll see what happens with this. But now today we saw weakness at the open. We gapped lower. We went lower than the previous day's low. Bottomed out, reached an extreme on the RSI, rallied back up to the 200, and then just kind of went sideways just underneath that 200 period. We'll be watching. Do we get above it, or do we get rejection and we come back and try to take out these lows and continue? We did get the momentum shifting. Got candle of indecision today. So again, that could be a bottom or it could be a continuation to the downside. We'll be watching to see which. In order to rally, we've got to get above this 200 period. But we are forming a little triangle here, a little triangle. So we could see a resolution either back down to try to take out that lower, test it, or an upward resolution trying to get back above the 200 period moving average here on the 5-minute chart. So that's the price action today, a gap lower, rally to the 200, pullback, a rally to the 200, and just stalling at that 200 period on the 5-minute chart. Again, S&P was up. It got a candle of indecision in this spinning top-looking candlestick that we had. S&P was flat. It's under the 10-period moving average. We still could come down to this trend line in the 20-period moving average. I've excluded the shadow there, or even include the shadow and come down just below the 20-period moving average. Again, you've got a potential rising wedge. I'm just connecting the peak here and the peak here. If we rally here or pull back and rally, again, you can rally up into this trend line or even overthrow it a little bit. I think you're going to form a divergence on the oscillator. I think you're going to form a divergence here on the RSI. Again, the RSI may come closer to 50. We may pull back a little bit more. Then try to rally with the jobs report and, see a peak with that or on into next week. But I think this week, next week, I think you could see a top if we could rally immediately and have that doji mark a bottom, get back above the 10 period. We can rally back up. I think you can form a divergence. We'll see what happens here. If we go a little bit lower and then turn back up, but I do think you're going to form this divergence on the RSI. We had one over here at this peak. We had one over here at this peak. My guess is that's going to be the case here. This is support right here. When we broke out, here was the Fed day. We had these fake out topping tails. I told you they had to be confirmed if they're going to mean anything. We sold off initially with the Fed, and then we rallied the very next day. I told you I was looking for a pivot rally to take us to new highs. That's what we got. And I told you that will form a top. Right now we're hitting this level of support right here. So again, just below that we have the 20 in here, but we're at this horizontal support level. So again, we'll see if we try to get traction back up or pull back a little bit more. But my guess is we're still going to make another higher high on the S&P because get closer to that upper boundary on the channel for the weekly, and I think that weekly for the S&P, and I think that NASDAQ is still going to fill the gap. Watching for divergences to possibly start forming, and even if we start to rally back up, this still may drop a little bit, but eventually, again, I am looking for that divergence, or it may just drop and we go lower. We'll see which way it unfolds, but I think you've got this rising wedge under construction here. I don't think it's done, and I think a divergence will end up marking the peak. It will happen either this week or next week. Once we get a top, I'll be looking for a reversal, and then the ushering in of the bear market. I've said, again, I continue to believe that we're going to get a top early October or mid-October. It might come earlier, as soon as late September. I told you I thought it would be mid or early October in all likelihood. Now, the MACD is still not rolled over. We're just breaching 80 there on the stochastic. Again, MACD could roll over and end up turning back up and form its own little divergence here. Or again, it might be prevented if we start to rally from crossing over. That's certainly possible as well. The market starts getting rattled, start breaking down here, trend line, the 200, and we start seeing all kinds of sell signals being triggered, then that's all she wrote. My guess is that's not all she wrote, and we're probably going to go up and make another high. By the way, the Dow looks very similar to the S&P. Now, we got that topping tail, got confirmed, but we don't have a follow-through. So again, we still may end up forming a divergence. And again, there's that wiggle room on the monthly, that long-term 125-year trend line. There's a major top right here, a short-term top, and we still go up one more time. We'll be watching to see how it unfolds. The MACD still has not rolled over on the Dow. And again, it's holding above the 10-period. S&P is just under it. Things to be paying attention to, potential divergences. Already had a small little one here. On the Dow, we'll see if we get another reference point or what happens. But again, I'm watching closely. We had confirmation of the topping tail, but no follow through. Again, a candle of indecision on the S&P 500 below the 10-period. We'll see if we try to rebound or we continue on down. It could be a continuation or reversal. Candle, it could be either one. We're seeing momentum roll over. I told you we could possibly get a divergence here. Say we go down further. Tensions in the Middle East rattle the markets, or the port worker strike, or say the jobs report may go down further, but then we come back up. We'll see how it unfolds if we try to bounce with the jobs report or sell off with it. Still think you got a good shot of a divergence, and maybe that happens sooner here rather than later. You can get it on the awesome oscillator. I think you can get it on the RSI, and I think you can get it here with momentum. We've already had momentum drop in the 60-minute time frame. The MACD is negative at the moment, and we've lost that 50-period moving average. We'd have to get above the cloud here, the momentum cloud, the trending cloud, and back above the 54 momentum to turn back up. This gives that we just continue down further. If we do, again, you've got the gap fill here, the 200-period moving average. We'll be watching that. If we get a bigger sell-off, market gets rattled, then we could see that level being tested immediately. If we don't, then again, we could try to rally from here or come down here and still try to rally and still end up forming a divergence. We'll see how it unfolds. Momentum, shifting bearish, reversal of conditions for momentum in the daily time frame, and we've had it in the intraday time frame. S&P 60-minute chart. Again, here we have the 60-minute chart. Again, we're finding support. We turned down. We gapped lower. We found support right at this support level here. You can see it beautifully on the 60-minute chart. This divergence has given us a pullback to support. If we can bounce here, we can go up and, again, form a larger divergence on the daily chart with the RSI and the awesome oscillator and other indicators. Because we start taking out the trending cloud and start moving to the 200. The MACD, again, it's negative territory, but if it recycles back up, again, try to bottom at this horizontal support level. Again, next level, gap fill and 200, so we'll be watching that. If we start getting a dramatic sell-off and start seeing signals really all over the place start turning bearish, that starts allowing the weekly divergences to play out, then And you may get the top sooner here rather than later. Guesses we're still going to form the divergence. That's my personal opinion. I could be wrong about that. I am looking for a top, however it may unfold. I'm telling you what I think. NASDAQ goes back and fills the gap. Rally back up on NASDAQ. Again, S&P could bottom here, go a little bit lower and bottom, and we could still go higher. I think you can complete a top here, and I think it's possible that happens this week or next week. Or take, again, maybe a little bit longer, maybe a little bit shorter, but I am looking for a top. Same thing for the 5-minute chart for NASDAQ. Again, we gapped lower, rallied up to the 200, pull back, tested it a couple of times. We're just underneath it. NASDAQ has to get above this 200, stay above it to turn it around. If we drop down, then again, the risk is we start taking out these lows. A bigger pullback. We'll see which way it unfolds. Market's rattled. It could still continue down, but I still think NASDAQ's going to go fill the gap at 20,400. And a candle of indecision in the form of a little spinning top here. NASDAQ was up 0.29 per 29 points. It was up 0.15% below the 10-period moving average. Again, this is what I think is going on. Again, maybe we pull back a little bit more. Could backtest. That's very possible. And then rally back up towards this 100 period. Bitcoin's pulling back to the 100 period right now. I think it's going to do the same thing NASDAQ's doing and rally up to new high. My latest Bitcoin video at the end of this one if you want to see what I'm talking about. We're seeing momentum roll over. We've turned down. We had that black candlestick, but we didn't fill the gap. My guess is we're still going to. Maybe we do it here. Maybe we pull back a little bit more and then do it. But I think you got a good shot that we're going to do it. Again, I could be wrong about that. Seeing more and more signals turn bearish, remaining that way, and start seeing the weekly charts begin to play out. Telling you what I think. I think we're going to get that lower high and complete a double top here on the NASDAQ. That gets a lower high, just like Bitcoin did back after it peaked in March. It formed a little double top. I think that NASDAQ already peaked over here and is likely not going to exceed that high. And that's why I told you back over here I thought it had topped there on July 11th. And I told you leading up into the July 10th top that I thought it was about to top because of the trend lines on the weekly and the monthly charts. I've talked about it great length in detail. NASDAQ 160-minute chart, again, we could still drop down to the 200 period, end up forming a divergence on the RSI. If we can get traction here, get back above the 50, back above the trending cloud here, again, I still think we can come up here, take out this high, move towards 20,400, overthrow it in all likelihood, and complete a divergence on the daily chart for the NASDAQ as well. Nice divergences here on the MACD, gave us the pullback. M is negative right now. We're watching these intraday charts. Regardless of whether we go lower or whether we try to bottom out, I still think we're going to fill that gap at 20,400. Something you should be aware of is that on the Dow and here on the S&P weekly chart, we have 8 of 9 bars. We previously had 9 counts leading into the July high. The S&P went a little bit higher. NASDAQ peaked the following week, got the reversal bar. S&P, remember, it diverged with NASDAQ at that time. It went a little bit higher into the June 16th or July 16th high. NASDAQ peaked on July 10th the week before. Diverged, as so often the case. I think they're going to do that now, but you have an 8 of a 9. And the 8 or 9 bar could be the high of the count here in the weekly time frame. Sometimes you get a 9 count, you go a little bit higher. That's why I said give or take. It's a rule of thumb. The rate cuts, first rate cut, 3.5, almost 4 weeks later, those rallies come to a conclusion. The end of bull cycle and turning shift into the bear market. See the same thing here. So again, I'm looking to see if we get a top. Now, as you're getting these weekly charts, 8 and 9, 8 bar could be the high of the count, but 9 bar could be the high of the count. We'll be watching to see how it unfolds. So I think you got a good shot, again, that we see a top either this week or next week on the S&P 500. But I think that NASDAQ's likely going to fill that gap in order to give it to us on the S&P. We'll see if we close out strong with the jobs report this week. We start seeing weakness, and maybe the count doesn't complete. We'll see what happens. As we close above the bar from 4 weeks ago, and we'll continue. So just something to pay attention to. This is the S&P. You got the same exact count on the Dow. They're both going up into those major long-term trend lines. Now, as we're getting the 8 of 9, forming these divergences all over the place, triple divergences all over the place on indicators. We could still go up and hit the upper boundary of the channel. My guess is that's going to be the case. But again, you should be aware, forming these 8 of 9 counts, again, we had these divergences all over the place on the S&P 500. Hard to find an indicator that doesn't have a divergence developing or a triple divergence. I'm talking about a divergence happening on the RSI in the most recent price action, but you have this larger divergence developing here from the July peak, and very similar to what we had back over here in January. I've talked about this at great length in detail. So again, I think we're going to get one more push higher in all likelihood. I think we're going to complete this divergence. I could be wrong if we start seeing signals all begin to turn bearish and start allowing the weekly divergences to play out. I think you get a peak either this week or next week, give or take, as I said, a rule of thumb. Got these divergences. Here's a triple divergence with momentum. Again, we'll see how we close the week out. We'll see if we rally with the jobs report up into this area or sell off. But my guess is, again, we're still going to move higher. But a lot of triple divergences everywhere on the weekly chart. But it's just all over the place on the weekly charts. Happening as the Russell's making a lower high. S&P's made a higher high recently. And again, they're diverging from one another. I think this divergence will play out on the Russell. I think the Russell will make a lower high, lower than the peak over here. And they diverged at the top when S&P made a higher high in 2022. The Russell made a lower high, and that is what happens surrounding tops. Yeah, I want to just continue to monitor these divergences. They're going to play out soon. Here's the RSI. Nice looking divergence there. If we take it all the way back from over here, you've got a really nice looking triple divergence. We had this divergence give us this sell-off of nearly 10% or so, just under 10%. Look at the divergence on the MACD. This is going to play out very soon. It looks very similar to this one. This price action here looks very similar to this price action here. The RSI looks very similar. And I think you're going to go a little higher. I could be wrong about that if we start seeing everything start turning bearish, but these divergences are going to play out. And we're getting these divergences as we're just under this upper channel line, and we're getting an 8 of a 9 count this week on the S&P. So I think, again, you got a good shot of peaking either this week or next week. Historically, that's been the case. We'll see if it is or not. Using probability. I'm not trying to predict the future. Oh, it's going to happen on such and such day at such and such time. I'm using common sense probability of what likely outcome as we get the Fed pivot and these negative divergences form. Probability is we're likely going to peak, top out, start to reverse, see these divergences play out. That's probability. Whether that happens immediately or whether, later in the week or on into next week or thereafter, I'm looking for a top. I think it's probably going to happen here in the next 2 weeks. I think you got a good shot of it developing here in the next 2 weeks in all likelihood.